Guys, Bitcoin is about to make another leg up, probably in the next week or two. And here's why. First of all, Fidelity's inflows have actually overtaken Grayscale's outflows. And BlackRock's total volume has surpassed Grayscale's total volume. So remember, like right after the ETF, Grayscale was by far the biggest volume on across all the ETFs. Essentially, it was more than half the ETF volume, and most of those were sales, especially because of the FTX sale. Now, when they reported that FTX has stopped selling, that was a bottom marker, and it basically stopped dumping right then. Like that day, they reported that FTX had stopped selling. Should have listened to the news then, because that's when we hit 38,000, and that's when basically the selling actually stopped. Ever since then, we've been on a slow wind upward because we've gone back from 38 to 43, recovering the vast majority of the losses. People are still being very, very careful right now, but since Fidelity by itself has offset Grayscale's negative volume, the others like BlackRock, Vanguard, etc., have actually overtaken it in positive buying volume. There is still a bit of profit taking going on, but I think that's going to be mitigated very, very soon. Also, BlackRock's total volume has surpassed Grayscale's total volume, so the Grayscale selling steam has basically veered off, and there's no other big seller right now that actually will take over Grayscale's spot. The US government, as much as it has Bitcoin, generally auctions them off. It does not sell on the open market. And yes, BlackRock may be buying from the Uncle Sam, which might be the reason we really haven't shot up all that much. But eventually, Uncle Sam will run out of Bitcoins. I mean, the Silk Road stuff cannot last forever. BlackRock has already bought by itself $3 billion in Bitcoin. Fidelity is very, very close up there as well. I think Vanguard will come in sooner or later because they're going to lose clients if they don't. So there's going to be a lot more inflows into Bitcoin. People are buying the ETF. There is a lot of positive demand, and inflows right now, I believe, are positive. And these are big institutional inflows, which is why we went back up from 38 to 43,000. If you wanted a time to buy, the 38 dip was your chance. Right now, 43 is still very, very low. I believe it will go up very soon due to a variety of these different factors. So if you're not buying now, you really didn't buy the dip, because all those chart things that say like lower 30,000s back to testing like 28,000, that was never really going to happen because FTX was the only source of selling pressure that you had over buying pressure, and that is gone now. So buying pressure has overtaken selling pressure in this instance. The other thing why we're going to go up, the economy is still strong. NASDAQ is pretty much at an all-time high, so is the Dow. The thing about, and the S&P as well. The thing is, crypto, if it's correlated with any of the stock markets, it's going to be the NASDAQ. And since the NASDAQ in tech is still fairly strong right now, despite the tech layoffs, the layoffs are generally for improving profit margin. They're not because the company's going to die or anything. Like Amazon's doing perfectly fine, but they wanted to lay off people to improve profit margin. That's just kind of like a thing that's wrong with the whole investor system right now, because investors right now are unreasonable. They basically expect expanding profits for every company, even the big ones that are well established forever. And the only way you can do that is to basically cut employees, even if you are making profit. So that's not really a problem with the company's profitability or the company's survival. It's generally a problem with investor expectations in this kind of capitalistic environment that hyper-capitalistic environment that we've created, that they expect unlimited profits, like basically indefinitely. So companies have to find creative ways to really cut their costs and make more profits so the CEOs can get their fat cat bonuses. That's why that is. But the economy is very, very strong. Tech is going pretty well. And if people are investing in tech, that means they do have money to invest in crypto. And because they have more money to invest in crypto, they're eventually going to come in and we're going to go up. It's also an election year. So in an election year, the president's administration generally wants the economy to go up to help improve his chances. So, Biden might actually be pushing Powell to cut rates a little more or make more positive assessments about the economy. Now, Biden isn't really a pushy president like Trump was, so he's not really going to push Powell to cut more than he wants. He might like nudge him every now and then, but he won't have a strong hand in this. So I think the effect will be limited, but there will be an effect because it is election year. I doubt they will be giving out stimuluses. The Fed has very little incentive to give out stimuluses right now, but I think he's going to make sure the 3 cuts actually come, and we're going to actually get 3 cuts. I don't think he's going to delay. We might actually get 4 just because the administration nudging. Biden isn't going to be the only one that's nudging. There's like people like Elizabeth Warren and other Democratic allies that are going to be nudging. The more cuts we get, I think the better the market will be, but that's going to be in the short run. But we're talking about 2024, so that is actually the short run. Now, some people are worried that when they cut rates, we're going to have a market reversal, because a lot of times we do. This is very different from some of the other times. It doesn't always happen, but sometimes when they do cut rates, it does happen. And generally, that's because when they actually cut rates, they are trying to avert a recession. Right now, we're cutting rates just because they're too high, and we want to get back to the neutral rate, which is around 2% from 5%. We're not actually cutting rates because we're like the economy's bad and it's already a recession. So it's kind of like a self-fulfilling prophecy usually. The economy's already bad, you cut rates, and the market goes down because the economy is already bad. But right now, the economy is actually not bad. It's rolling around pretty well. And I think cutting rates will basically just heighten the market even more and basically get more money into the market. Right now, the availability of money and the cost to borrow is too high. Once they bring that down, I think people will be a little bit more loose with money. And adding on to that election year, I think it's going to be, adding on to the election year, that's really going to cause kind of like a big shakeup, and I do believe that will cause crypto to go up. The halving is also coming. Now, the halving obviously restricts inflow of supply. Remember, some of the coins that BlackRock is buying is from the miners, and there's constant mining selling pressure. Obviously, a halving is going to cut that in half because you have half the selling pressure from miners. Also, that raises the bottom price for miners to stay profitable. And I think the Bitcoin industry is too big, especially with BlackRock and Fidelity coming in, that they'll actually even allow Bitcoin to fall below mining price, because that would kind of destroy the entire industry. And you can't revert on the hash rate, because if you do, that brings in security problems. So Bitcoin has this conundrum. I've actually talked about this before. People don't want to listen to it because they're Bitcoin maxis, but the thing is, like, the way Bitcoin is structured, it has to keep growing for it to sustain itself and has to keep growing at a fast rate. And the halving is kind of a choke point for that. So the bottom for Bitcoin will rise significantly. And of course, with the rise in the bottom, you will get a rise in the top. Plus, like I said, the ETFs will still need to buy Bitcoin, and the miners won't have as much. So eventually the market will flow up, I think, decently quickly after the halving. Fourth, there is no COVID to screw things up this time. There's this like new kind of like disease in China. I don't think that's going to come to anything. But last time we basically had that flash crash because COVID shut down U.S. businesses. This time, I do not see anything shutting down U.S. businesses. So we're not going to get that flash crash to 20,000 like some people want us to. If you missed it at 20,000 a year ago, you just missed the boat, and you're going to have to buy at a higher price. And you better buy around now, unless you want to buy at 60,000 plus in a couple of months. So without that whole COVID thing, I do not think there is a huge speed bump on the way up. Another reason is exchange outflows are increasing. And that's good, because that actually means people are moving Bitcoin from Coinbase and Binance into their own wallets for self-custody, which means they're not about to sell. Generally, big inflows to exchanges mean that people are about to sell. This means people are holding long-term, which means there's less available on exchanges, less liquidity, added with buying pressure from BlackRock, Fidelity, and ETFs means that we are going to slowly go up. It won't be any kind of God candle, but it will be a slow push up from now onwards. I don't think there's a giant source inputting into the banks. I think there are a lot of theories out that the SEC will tell the US government to put all their Bitcoin on exchanges, but that's generally not the way the US government or Uncle Sam operates with their Bitcoin. Uncle Sam also wants to get as much money for their Bitcoin as possible. obviously because Uncle Sam is in a lot of debt. So they're going to want to sell off at auction and not affect the market themselves. So the exchange flows are increasing. That's actually a really, really good sign for cryptocurrency, because that means that cryptocurrency, the demand is up, the supply is going down, and of course, in that market dynamic, the price is slowly going to go up. So right now, in all, is one of the best times to buy. I think you'll only have a few weeks, maybe a couple of months at most to wait before you really start making a good amount of profit. I do think it's time to buy some altcoins because despite the ETF, I think the Bitcoin upward trend will impact altcoins very, very quick. And if you don't buy right now, you are going to be missing a lot of the boat. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.